Okay, very good morning to all of you all here. Welcome to the panel discussion this morning. My name is Kai Hu. I'm from A-Star, and I'm the moderator for this morning's discussion. So the topic for this morning's discussion is courage, ambition, and boldness. What has the year of the tiger brought to the Southeast Asia investment landscape so far? So as we are all well aware of, the year of the tiger has started off with some risks and uncertainties. So we have the war started in Ukraine, and then we have a lot of inflationary pressures right now, and then we have the meltdown in the tech stocks, and so on and so forth. So how have all these risks been impacting the Southeast Asia investment and business landscape? And then how should businesses and startups be responding to that? I'm very excited to have an amazing panel with me today. So we have today with us Michael from Golden Gate Ventures, and then we have Michelle from Quest Ventures, and then we have Tony from Stellar Lifestyle. So I'm very sure that they'll be very excited to share their insights with us on this topic that we have for this morning. So I will just outline the format for today's discussion. So we have about 30 to 35 minutes of discussion, and then we'll leave behind 5 to 10 minutes of Q&A from the floor. So without further ado, I'll just turn to my panelists today and then have them briefly introduce themselves. Michael, please.
Sure. Thanks for having me. Good to see you all. My name is Michael. I've been in Singapore for the past 9 years. I'm a partner at Golden Gate Ventures. Golden Gate Ventures is an early stage VC fund based out of Singapore with offices in Jakarta and Ho Chi Minh City as well, which we opened up yesterday. We invest across the region. You might have heard of a few companies, such as Carousel, Caro, and yeah, super excited to be here.
Thank you, Michael. Michelle, please.
Yeah, thank you, everyone. I think this is a great day to meet everyone in the morning. I'm Michelle from Quest Ventures. I've been in Singapore for a few decades. Yeah, so I think for Quest Ventures ourselves, we invest in Southeast Asia and Central Asia. We have about 100 plus portfolio companies operating in 150 cities. So we look forward to meeting all of you and exploring opportunities.
Thank you, Michelle. Tony, please.
Thank you, Kahu and the panels. Good morning, everyone. So I'm Tony from SMRT. Actually, Stellar Lifestyle is the non-fair arm, which is the commercial business running the retails and out-of-home medias. Actually, we are the largest transit retail operators and out-of-home. I think thanks for this opportunity. We are here to share actually how are we growing our business, tapping on investment as well as innovation together with startup. Thank you.
Thank you, Tony. Okay, I think without further ado, we'll launch into the discussion proper. The first topic is that there seems to be a perfect storm with all the risks coming together. We have inflation, we have war, we have stock market meltdown, and so on. So my question is, have any of these risks affected the investment or business landscape in Southeast Asia? And how do you see this panning out for the rest of this year? Michael, I think we start with you.
Sure. I mean, it's definitely impacted the way investors look at investing in early stage companies and even in late stage companies. If you go back 1 year, 2021, sky was the limit. Or actually, the sky wasn't the limit. You could go beyond. Companies were raising at very high valuations. Company fundraising went really fast. We saw investments or investors from the US making investments here in Southeast Asia. We've seen a number of companies, Bukalapak, Grab, list on stock exchanges. So it was a very, very bullish year for the ecosystem in general. That sentiment has definitely changed. If you look at companies that are planning their IPO for this year, some of them have been postponing their IPOs until next year or even 2024. There's been a lot of discussion around layoffs within the tech sector. Like, are we now tightening the belt and more focusing on being profitable as opposed to burning money? So the sentiment has definitely changed. On the other hand, if I look at the rest of the year, a number of larger funds have raised fresh capital. So if you follow the news, our colleagues at Jungle Ventures have raised a massive fund. East Ventures in Indonesia have raised a large fund. Alpha JWC, so everyone has raised a significant fund, and they have to deploy that capital in the next 4 years. So on the one hand, you kind of see a more conservative approach from investors at the later stage. On the other hand, a lot of dry powder available as well. So it's going to be a very exciting time.
That's great. I think that's very good news for the startups here. They're looking for capital. Okay, I think maybe I'll turn to Michelle to share her views.
Yeah, I think I totally agree with Michael. There's a lot of dry powder for VCs out there, especially in this region. And I think maybe on Kai-Hu's point about the Russian-Ukraine war, definitely we are seeing a focus on the discussion on ESG because they were talking about whether weapons can be an ESG asset or not. And then we're also looking at the energy crisis and also cybersecurity. So I think like where VCs might be deploying their money would be some of these areas. And I would say that in terms of the tech correction that the valuation correction that we are seeing in the public market, it's also overspilling into the private market at the later stage. But I think the earlier stage, I think is still pretty fine. I think for early stage funding, we stayed flat. Data as of April 2022. Seed stage funding, I think we increased by 14%. Yeah.
Okay, thank you, Michelle. Tony, do you have any views on this topic?
Well, I think we start with the tiger year quite ferociously. I think not good for the investment market. But I think whenever there's a crisis that presents itself an opportunity, it just make the investment thesis a bit more sharper. People are looking for great opportunity to invest. Over the past 2 years, COVID have bring some changes, and I think if the startups are focusing at the right area, riding on the wave, I think there's a great opportunity to look at. So while the investment are more cautious at this moment, I don't see that it's making anyone stopping, in particular to corporates. Corporate do see the opportunity to work with startup, and this can be a silver lining for startup reaching out to funds.
Thank you, Tony. Yeah. Maybe I'll just ask another question, which is regarding, I just saw maybe last week that there was a memo sent out by a famous VC firm in the US, Sequoia Capital, to their startups and telling them that this time is different. It's not like the COVID. And this downturn is going to be longer and you guys better watch your costs and so on. So I was just wondering, for Southeast Asia-based VC firms, are we also telling our startups the same thing and then asking them to watch the costs, be more careful with the spending, and so on and so forth? Maybe Michael can share your views, please.
Yeah, I think it isn't as of recent that this discussion has been happening. That same firm wrote a memo in 2020 as well, called the Black Swan event during COVID. But if you even go back to, I would say, the WeWork days with the kind of botched listing, there was a lot of discussion around should we be looking at growth at all costs or should we be looking at profitability? And I've noticed that since 2019, the discussion has shifted with founders. Whereas in 2017, you could raise capital and get market share and try to grow as fast as you can, subsidizing your own growth. That narrative has definitely changed. It's going to change even more now. I think as companies at the later stage are looking at planning their listing or planning an acquisition, the question is, when are you profitable? Retail investors, institutional investors are scrutinizing deals much more. If you look at GoTo's figures, I think they've had an increase in their numbers as well. There've been growth. There's been so much focus on profitability. So I think that those discussions are changing. It also means for early stage startups that if you are looking to raise capital and you are coming to market and you're talking about valuation, the discussion is going to be, okay, you want to have a high valuation now, but there's always a next round, right? So if you're raising a Series A at 40 million, are you going to raise it 80 million in your next round? So just being more conservative, being more prudent is the discussion right now.
So I think one of the takeaways is that I think startups also need to be more cognizant of the valuation and shouldn't be expecting like high sky valuation in this kind of environment. Okay, maybe turn to Michelle for her views on this topic.
Yeah, I mean, I totally agree. We are looking at startups raising like subsequent rounds as well. So we're looking at a decent like maybe 3 to 5x in terms of valuation. So if you raise at a very high valuation at the early stage, you have to be careful about how you're going to raise the next round. So I think that would be some important consideration for you. In terms of the spendings, we have always advised our founders to be very prudent in terms of how they spend their money, not to hire recklessly and then after that laying them off like some of the tech companies that are doing right now. So I think for Quest Ventures ourselves, we are very hands-on with our founders because of the operator background of our partners. So in terms of that, definitely quite hands-on in terms of trying to manage their operational costs. And I think we are also trying to shift towards a path of profitability and positive unit economics when we evaluate our investment deals. Yeah.
Thank you, Michelle. Tony, so for your business, are you looking at growth at all costs, or are you thinking of cutting down some costs in the current environment?
In the first place, typical corporate don't grow at all costs. That's to begin with. I think the shift is inevitable, in my opinion, because now shareholders are very cautious with their money spent. They definitely wanted to see a faster return. In the past, we talked about race to zero. Now they are talking about path to profitability. So it can demonstrate that their time frame for patience is actually getting shorter. Means that they will actually scrutinize and be very prudent about it. And we do see some of the listed company previously was a unicorn. Once they listed, you do see them bring in corporate people to structure it and bring it to be more the path to profitability faster. So I think in these coming years, definitely the focus on the economics of going into profitability is definitely one of the deep consideration. Yeah, that's my view.
Thank you, Tony. Okay, now we switch gear a little bit, and instead of talking about risk, I think we talk about opportunities. So maybe I'll go right to left this time. So Tony, I think I read that you guys invested in a robotics company that dispense coffee, right? I think that's a real innovation. Can you just talk a little bit about the new opportunities and innovations that you're seeing in your kind of business?
Okay, so just now I mentioned where Stella Lifestyle is. We operate the largest transit retail in our network. In the future, we do see labor costs will be one of the major consideration. Convenience continue to be the key focus for our commuters. That's why we are looking for a startup that is able to offer this value proposition. So with that, that's where we personally feel that the way of the retail today and the retail tomorrow definitely is going to be different. That's where we make investment in those that are able to derive those value. The robotic barista that you mentioned is Crown Digital. Actually, at a per hour, they can actually dispense about 100 coffee. And actually, they can allow booking before even you reach the station, and you just can collect when you reach it. So this is some of the value proposition that we're looking to enhance our future business.
Okay, I can't help but mention that because I was in Seoul recently, and I saw this urban farming outfit in the Seoul subway station. So is this something that SMRT is also looking at implementing in the stations?
This is probably in line with Michelle's topic about the ESG. I do not want to rule out that possibility, but again, we are also looking for sustainability business model to make that work. So definitely part of the ESG consideration will also be part of it, our future growth. Yeah.
Thank you, Tony. Yeah. So Michelle, what are the opportunities that you're seeing, and what are the potential unicorns that are coming in line?
I think in terms of unicorns, I think just now the parliamentary secretary said that there are 19 companies, right? Almost half are in Singapore. In our portfolio, we have 4, and that's something that's very lucky. I think we are very, very glad about that. And in terms of what's coming up, in terms of opportunities, we do see that ESG will feature very strongly because in terms of tech, it's actually more on replicability and scalability, but sustainability is what brings you further to make sure that you are a company that is going to last 100 years into the future. So I would think that will feature very strongly. And in terms of the sectors, what we are seeing is that blockchain, gaming, marketing tech, and supply chain management, despite the funding dip, right, these are the sectors that have seen increase in funding. So I would think that these are some of the opportunities that you will see, and sustainability would definitely be incorporated into these sectors to make sure that they go for the longer run. Yeah.
How about we hear a lot about the metaverse and the Web 3.0?
Yes, actually, we have like 7 funds at Quest Ventures, and one of them is Metaverse. So I think for that, it's something that we definitely do see opportunities in. But maybe I will let Michael talk about Web3 and the Metaverse.
Michael?
Yeah, so I would say in terms of maybe a few additions in terms of sectors. Yeah, I spoke about urban farming a little bit. We're seeing more and more in the vertical farming space. I think a few years ago it was relatively small in Singapore. I think those companies are getting larger and larger. When we look at agri-tech in general, we're very, very bullish on Indonesia and Vietnam. There are already amazing companies. If you look at, for instance, e-fishery within the shrimp space, we see that there's more happening there as well. I think the convergence, I'll talk about Web3 in a second, but I think the convergence within fintech is interesting as well. So where we used to have very siloed companies, you were a lending company, you were a payments company, you were a insurtech company. All of these companies are now getting licensed, and they are looking at, for instance, becoming a full bank, becoming full service, doing both B2C and B2B. So I think kind of that convergence of fintech is an interesting trend as well. Now, when it comes to NFTs and Web3, and there's a lot of interesting developments happening at this moment. Maybe on the ESG side, I think carbon credits is something that is now really popping up. It's mainly still in the US, but we're seeing a few companies now in Asia as well. We've all seen kind of the rise and the fall of NFTs in a very short time period. I'm not sure if anyone owns Bored Ape or any of the other ones. But I do feel that the utility behind NFTs is something for the longer term that makes a lot of sense. So if you look at, for instance, the fashion industry, where you can own a digital asset, and a digital asset gives you a lot of perks in real life. So whether it's a new release for a new sneaker or getting certain access to certain deals. Within music, it's interesting. So for artists being able to distribute their own music as opposed to working with intermediaries or big publishing houses. We're seeing the same in the movie and the arts industry. So I think the utility for NFT is still very, very early, but give it a few more years, and I'm very bullish on that being a bigger market. The last thing I can say about NFTs is it had a very, very unintended effect. Because a lot of young kids were investing in NFTs, the moment the NFTs dropped, they still want to continue investing. So they started investing in stocks. So it was a way for them to kind of learn how to invest. And then they decided, hey, platforms like a Robinhood or a Stashaway that we have here in the region became platforms for them because they were used to making investments through mobile devices. So I think that's an interesting trend we're seeing as well.
Okay, very interesting. So is there any portfolio company in your portfolio that's into NFT or into Web 3.0 at the moment?
Yeah, we have we used to have a small, what we call a specific crypto fund called Lunex. That fund invested in a company called Mintable, and Mintable is an NFT marketplace. So if you would buy an NFT, you would use like an OpenSea, but Mintable is a competitive marketplace as well. Yeah.
Understand. Okay. So I think we look at the whole of Southeast Asia. If you look at the numbers, right, I think Singapore and Indonesia seems to be receiving the bulk of the funding. So I was just wondering whether there are other parts of Southeast Asia which are also very exciting for investors. And I think I'll turn this over to maybe Michelle to start with. What are the opportunities that she sees in the rest of Southeast Asia other than Singapore and Indonesia?
Yeah, I agree. I mean, we have been seeing a lot of funding coming in from from Singapore and also Indonesia. I think that's bulk of the funds that are investing into startups in Southeast Asia. But we do see tremendous opportunity in Vietnam. So I think from 2017 to 2021, the amount of funding actually went to 40x. So that's a significant number, from 48 million to 2.1 billion.
Wow.
Yeah.
Is the money being raised in Vietnam itself, or is actually money from foreign investors coming into the Vietnam market?
I would say that it's a mix of both. So you do see returning Vietnamese coming in to raise their funds within Vietnam, but you also see more global and regional investors investing in Vietnam. So the total number of funds investing in Vietnamese startups increased by 60% in 2021. Yeah.
Okay, fantastic. Yeah. For Stella, Tony, do you guys actually look into your Southeast Asia market for your expansion, or do you see any Southeast Asia startups coming to you to raise money or to collaborate with you?
Yeah, definitely. I think we are looking beyond Singapore in our operation to bring our capability. So at this moment, we are building out those capability, and investing in startup is actually one channel of that. And actually, you're right. Actually, we do see funds coming in, tapping on Singapore and bridging out into Southeast Asia. And this also gives opportunity for local startup to consider using Singapore as a platform and potentially going, because those places were mentioned like Vietnam, all these things, I think they are looking at how big the market itself is. Singapore definitely is a very good platform, but the market is beyond Singapore.
Yeah, maybe I'll turn to Michael and ask his opinion on the Southeast Asia market. Are you guys investing primarily in certain markets, or you guys see some other markets coming up as well?
Yeah, if you look at the bulk of the dollars across any VC fund in the region, it tends to be Singapore and Indonesia for obvious reasons. Singapore for its ecosystem, all the VC funds are here. There's late stage capital here. There's a very supportive government here. There is deep tech initiatives. There's so much happening in the city itself. But yeah, to Tony's point, the market itself is too small to kind of have your business here. You expand to other countries. What's also happening is that even an investment in Indonesia would have their holding company in Singapore, just for transparency and ease of investing. To Michelle's point, yeah, Vietnam is kind of the next up and coming sort of hot market. I think it is driven by a few things. One is there's a lot of capital coming in from Japan and Korea. So if you look at all the big corporations, Lotte, Samsung, they all have big headquarters in Vietnam for the specific reason for a lot of talent. The domestic market is very interesting because a lot of the Vietnamese startups tend to stay in Vietnam. Indonesian startups tend to be Indonesia first, and then they branch out to other countries. We haven't seen any of the larger Vietnamese companies kind of expand across the region, but that's something that's hopefully going to happen over the years. So it's a very, very active and vibrant early stage market. I think the later stage is relatively thin. There's a few big names like Tiki that are doing large fundraisers. But if you would compare it to Indonesia, it's still kind of a drop in a bucket. But yeah, we're very bullish on Vietnam for the longer term. Hence, we opened up 2 offices in the past week, and we foresee a lot of deals coming from the region as well.
Okay. 2 offices at the same time. Okay, to do investment or?
Yeah, we've noticed that this being on the ground in the region on a permanent basis is very helpful when it comes to deal flow and supporting your portfolio.
Yeah. That's great, yeah. So I think it looks like other than Singapore and Indonesia, Vietnam is the next hot house for investors investing into startup companies. Okay, now we switch to another topic which I think I would like to welcome Michelle to share her insights on first, which is on ESG. I think the topic of sustainability has become very important for businesses and the government. And I think a lot of us will wonder how is it happening in the startup space. So I think Michelle, as the head of ESG at Quest Ventures, maybe you can share your insights. And just now, I think you mentioned a new initiative that your firm is rolling out as of yesterday or today, right? Today, okay.
Yeah, I think ESG is featuring very strongly. I think not just in the startup space, but maybe very firstly on the government level and also public listed companies. And it's coming into the startup space as investors are more focused on bringing their companies to exit, and startups building ESG into their DNA at the very early stage of the startup. So I would say that in terms of that, Quest has been doing this since 2018, looking at the environment and social and governance impacts into our startups. I would say that in terms of the new initiative that we're rolling out, we have actually selected 8 companies to participate in the Sustainable Impact Accelerator. In total, we are supporting 30 companies to help them maybe get some initial funding and then start to grow and scale. So a total of USD 1 million will be invested into this initiative, and we'll be doubling down on the winners from our various funds.
That's fantastic. Yeah. Maybe Tony, do you want to share some of the sustainability initiatives that SMRT or your division is actually implementing?
Yes. So I think there's a lot of focus on the sustainability, in particular in the environment portion. So I think that one, many startups are focusing on that one. So I just want to share one underdog that are potentially or segment, which is the social part. I think the social part is getting a lot of traction, and where medical tech or health tech should be focusing on that can help to solve the problem from the government. This eventually, I felt that will be a platform where the corporate can also leverage on, because all the listed company will need to score on their ESG. And I think a lot of focus is on the environment, but rushing to carbon zero. But the social part, I think this is a part where maybe is not getting enough focus, which I think if we are able to focus on those areas, I think that will give you an opportunity against those are racing towards the sustainability in the environment. So within what Stellar Lifestyle is doing, we are actually crafting out space to support startup in areas where they can contribute back to the society. So these are the areas that we're crafting out space and giving support to them in support of that. So I think there'll be more to come, seeing us in action in those areas.
That's a great initiative and a good point. Yeah.
Can I just echo Tony? Yeah, I definitely think that human-centered impact is really more important in terms of like a focus. There is already too much focus on environment. I mean, yes, it's an urgent issue, and definitely we have to rush to net zero. But then again, if we look at the investments into climate tech startups, the valuations are a bit too high. But we'll see. We'll see what Michael thinks of them. And I think that if you're looking at the human-centered impacts of environment, I think that's equally important. And I would think that in terms of that, Singapore also have like critical societal issues that we have to solve, such as the aging population, the silver economy. Great opportunity lie in that. And in Asia, we are rapidly aging as well. So that is a huge opportunity. And that's why our accelerator also have quite a number of companies, almost half of them targeting this issue. Yeah.
Thank you, Michelle. Michael, I think my question maybe took a little bit on ESG, as in a lot of the big companies and government, they embrace ESG, right? And then it becomes very important in their agenda, especially for listed company when they actually need to have a separate session to write on what the sustainability goals. So I was wondering, for your portfolio, for your startups, what are you telling them? And then is it really a priority for the startups for the ESG initiatives?
There's been a lot of discussion around how much of ESG can you enforce on a company that is just raising $1 million. Not much. Their initial concern is, survive another day and make sure that the company gets to Series A and then gets to Series B. What you'll notice is that companies at the later stage are incorporating it in their business. So they look at their carbon footprint. They look at how do we think about flights. To Tony's and Michelle's point, a lot of it has been around environmental and sustainability. We're now seeing, luckily, more of a shift towards social as well. So, for instance, there's Southeast Asian, a lot of VCs have been signing up for it. It's a fast-track program for female founders. How do we make sure that sort of the founder collective that we all invest in is more diverse than it was 5 or 6 years ago? So apart from just investing in specifically healthcare or sustainability, we look at what is our social impact as a firm itself, and how can we support and help underrepresented groups to be part of this ecosystem as well.
Thank you so much. Yeah. So maybe you'll cover the last topic and then we open up for questions. Michael, for yourself, I think you've been in Singapore for about 7 to 8 years?
9 years now.
9 years already,
yeah.
okay. Doing investment into startups. So how have you seen the VC landscape evolving in the last 9 years when you're here?
Oh my goodness, so much has happened. I think where specifically for Singapore itself, if I go back 2012, 2013, a lot of the investments were driven by government-backed programs. There was a lot of government support, which was kind of amazing because it really helped kickstart a few firms. There were like a few angel investors, like a lot of accelerators and a lot of incubators. That has really evolved to like a really mature and robust venture market where we have our local and our global firms like ourselves and Quest corporations that are investing in startups that have become very active and strategic partners. Top tier funds out of the US. You know, we have of course Sequoia here in Singapore, but folks like Kleiner Perkins, Index, they're all investing here in the region as well. So I think it really has matured. I think an ongoing discussion that we always have in Southeast Asia is, you know, where do we see the exits and why don't we see 10 listings a year like we see in China or in other markets. I think slowly we're getting there. I think with Indonesia being more active as a stock exchange and being an option for startups, that's exciting. What also excites me is that we are seeing a lot of founders that used to work at Google or AWS or even Gojek and Grab, and they decided, hey, now it's my time, and I'm starting my own company. So a lot of really educated founders that are really good at fundraising and building their company and becoming their own leaders. And then I've known these people for 9 years, so I'm also seeing them personally evolve from young kids starting a company, becoming like CEOs of 1,000 people companies as well. So it's been really exciting to be here.
That sounds like a very exciting journey. And I think the VC landscape in the Southeast Asia will evolve some more to become even more exciting, right? Yeah. Okay, maybe Michelle can also share. I think Quest Ventures has been investing in Southeast Asia for quite a while now. Yeah. So have you seen the landscape evolving over the years?
Yeah, I would say that definitely the ecosystem has matured in Southeast Asia. We do have more startups being created and also like moving towards exit. I mean, we have about 50 unicorns, and in Singapore we have like 19. I think the latest number might be 22. So I would think that in terms of that, we definitely see the ecosystem mature. And for VCs, right, I think it's good that we are seeing quite a number of serial entrepreneurs coming back into the ecosystem, starting new companies. And they are not new to fundraising, so that's easier for us to communicate with them. But we also see like younger founders deciding not to go the corporate route and decide to start their own companies because they are inspired by the success of the exits over here. So definitely very exciting to see more growth in Southeast Asia, and also the integration with all the other regions. I think that would be something that's going to be of interest. Yeah.
Thank you, Michelle. Yeah, Tony, just now we spoke a little bit about the new innovations that you're thinking of bringing to Stella, right? Like Stella Lifestyle. So I think it's kind of like the transitioning stage where you look at more innovations in the space of yours. So maybe you can share your insights about how are you actually managing this transition into introducing more innovations in your space.
So I think just now your question is that how do you see the VC environment is happening, sure. And then from a corporate perspective, I think from a corporate perspective, I think we learn from VCs, we learn from the startups, and in today's world, we see a lot of corporate having their investment arm into startups. Now there are new trend that corporate are starting with venture build models that they are spinning off business. I think they see the benefit of startups being the speed to market is critical. Especially now you're fighting with those startups that is propping up like nobody business. So I think that one will force the corporate to think a different way, meaning that it provides opportunity for converging for both the VCs. Now we do see corporate, even in SMRT, we have our investment that is looking into startup to invest. And likewise, I think we play a pivot role to validate as well as to provide support system through a venture build model. So other than the robotic barista that just now we talked about, actually beginning of the year, we have incorporated a corporate startup focusing on lifestyle center within the station, providing opportunity for co-meet, co-work, working with big players, and to form the ecosystem to enhance the experience for commuter and travelers within the network. So I believe these are the opportunities that are converging between the private world and the corporate world. That's happening.
Thank you, Tony. Yeah, I think Tony has a different perspective from his corporate perspective. Yeah. So I think we should leave some time for questions from the floor. So if any one of you have questions, I think some of the staff have mics here. Just raise your hand and the mic will come to you. Okay, there's a hand there.
So I think a question mainly for Michelle. When it comes to investing into like sustainable startups, I imagine there's often like challenging decisions, business decisions, where something may be more in line with ESG goals or more in line with profitability. So how do you help founders make these types of decisions?
Thanks for your question. I think we get this question a lot. Yeah, but I have to say that in terms of profitability and also like sustainability, right? I don't think they are mutually exclusive. Actually, if you look in the long term, they actually converge, and you would want your business to be sustainable in order for it to be profitable. So I would think that in the long run, definitely they converge, but maybe in the short term, you might be trying to like cut on some of the profit in order to address some impact, increased impact on the environmental or social front. But if you look at the long run, especially when you price in the externalities and also like the transition risk, it will make sense for a company to be profitable maybe in the next 50 to 100 years. Yeah.
Thank you for the question. Okay, we have another question at the back.
Thank you very much. You mentioned fintech, healthcare as main industries to invest in. Any others that area or industries that you think will be interesting into investing, or that some of your funds are currently looking into, more into a near future?
Maybe Michael, you want to take that question? Other than fintech and healthcare?
Other than fintech and healthcare, and Web3 then, okay. I would say supply chain is still very interesting. If you look at countries such as Philippines, Indonesia, Vietnam to an extent, where infrastructure is extremely difficult just because of the way the country is built. Supply chain, when it comes to last mile logistics, first mile logistics, working with MNCs, even getting from farmers eventually to retailers. Those are all kind of interesting places that we're currently looking at. Yeah.
Thanks.
Thank you. Okay, we have a question in the middle row on this side.
Thank you so much. I'd like to hear from the panelists about their views on food tech in Singapore, especially plant-based food, and you know what your thoughts are in terms of potential. Thank you.
Okay, yeah, Tony, please.
So I think yesterday night I was at this dinner where we have all the business leader, and Minister Iswaran was the guest of honor. And one of his view that about the focus, actually food tech is definitely one of them. They are converging between agri-tech and food tech, like what Michael just now mentioned. I think just now I was thinking in my mind, actually, when the startup is focusing on mainly are two areas. One is sustainability. When we talk about sustainability, sometimes we go to basic. What do we look for? We look for food, we look for water. So these are the areas. Definitely these are areas that there will be a growing trend, big growing trend. And with the existing macroeconomics factors being affected by the war, it just become more apparent. Means that there are more immediate needs. It may not be known a lot in the private sector, but it seems like it's a lot of focus from the government perspective. So I think definitely that in my opinion, that is a very critical. But when it comes to food tech, there is many part of the food tech. You are talking about in preparation, or you're talking about the replacement, or you're talking about the storage. So I think these are potential areas for you to explore. Yeah.
Maybe just to add to Tony, we've looked at food tech space pretty extensive. I think what is interesting specifically here in Asia, and also for the past 2 years, is typically the producers were delivered to the restaurants. eventually it would go into the supermarket, and you'll see it more and more as well. The issue in Asia was always price point. Whereas I think Asia is known for its rich food history, but also for its very competitive price point. So when you bring sustainable food in, or alternatives that are priced 2 times the price, it becomes very, very difficult to get a big customer base. So I think the industry is working towards how can we bring prices down to make it more affordable and make it more attractive for a larger consumer base as well.
Okay, we have another question in the middle. Yeah.
Hi. Sorry, the question is something like the part of the earlier question on the trend-wise. In the previous few slowdowns or the winters for the startups, right, we see the shift from B2C to B2B. Is it something like we are seeing? Because since last few years, B2B was already doing well, but is it in this thing, do you see anything such like that?
Yeah, I'm happy to speak to it.
Michael?
Yeah, okay, I'll kick off. There's been a larger B2B trend, specifically in Indonesia, just because there's 42 million like small and small size merchants in country that all are digitizing slowly. So you can think of invoicing, payments, inventory management, etc. The issue with the demographic is that it's slow growth. If you look at a B2C company, you can almost fuel growth by just putting in more money. When it comes to B2B, it's a different approach. So we've seen an uptick in these companies, but they tend to grow slightly slower than your typical B2C companies. But I would say, in terms of our portfolio, I'd say it's 50-50 in terms of B2C and B2B.
Yeah, I actually agree with Michael. I don't think there's the very obvious shift from B2C to B2B. I think the opportunity just is a little bit more apparent in Southeast Asia. And if we look at specific markets where perhaps on the government front, they are pushing it down, digital transformation policies for the country, for example, Vietnam, I think by 2025 and to an extent of 2030, they want to fully digitalize their economy. So I think that's something that we're seeing that's pushing the more B2B solutions, and you do see more investments in that space, but the B2C side is growing as fast. So I think that's also the pandemic that's pushing that. So I don't really see that there's one that is overtaking the other. Yeah.
Okay, I think we have maybe time for one last question. Anybody? Yeah, at the back.
Hi, any of you can answer this question. I am keen to know, there's this whole thing about direct to consumer that is really picking up. There's a whole shift for a need for very good content, which is driving sales. What are your thoughts on that? Do you see that working in the long run?
Yeah, actually, we don't quite get your question. Maybe you can just repeat it one more time. Yeah.
So digitalization has, if you don't mind, I'll just remove my mask. Digitalization has created this whole space where brands are reaching out to consumers directly using technology. So is that something you're seeing in the long run? Will that sustain, or do you think it's just a post-pandemic situation?
Michael, you want to start?
Yeah, I'd say to an extent, yes. I'd say one good example would be the education space. I think the pandemic showed. I'm a parent. I'm a dad of two kids. The moment we switched to home learning, and this isn't the school's fault, but the experience was just awful. They weren't like fully prepared to give a big amount of parents digital learning. And those tools have evolved really fast. And I can now argue that for parts of learning, I can do it fully online. And that's kind of where you take out intermediaries and go direct to consumer. And you're seeing that in more spaces. You'll see that in media. You're seeing it in art, where there's no more intermediaries, because the digitization helps you to be a direct communicator with your customers. So we're seeing that more and more. We're seeing that in healthcare as well. One of the more interesting trends is, as we're all having our phones, or in some cases our wearables on our wrist, there's a lot of data actually available. just by having your phone in your hand and walking around, it tells about what you've been doing and how active you were on your day. All the data can go to a clinic, a hospital, your GP directly, and without any intervention, they can basically tell you what your state of mind is. So I think we're seeing more and more of leveraging data to either improve your health, either using it for education, either using it for logistics, either using it for commerce, and we're seeing that more and more.
Thank you, Michael. Unfortunately, we're running out of time. So thank you very much for being here today. And please join me in giving a big round of applause to our panelists this morning.
Thank you, Kai-Hu.